with me today, we have Karthik Nandyal. He's the co-CEO and co-founder of CredCore. CredCore is a AI-driven technology platform focused on private credits. But the first thing I got to ask you is like, okay, so why like a fintech conference? Why are you guys here?
Yeah, so I agree with you. We are an anomaly here. It's all payments and ID and security, all the things that e-commerce enable. We are here to talk about a much larger financial movement that's going on, which is the emergence of private credit.
Right.
You can imagine if you are in Wall Street universe, which is where I swim, not in California, which is where most of them swim, private credit is like the GenAI for Wall Street. It is an emergent of an asset class that existed for the last 20, 30 years. It has suddenly ballooned.
Right. Ballooned in like the last 2 or 3 years, maybe a little bit more than that. We're talking like trillions, 5 trillion?
Exactly.
Yeah,
So,
exactly.
just for data, about 10 years ago, this was an asset class that was around 400 billion. And today it is touching north of $3 trillion. Very few asset classes have ballooned and absorbed this much capital in this short a time.
So what do you guys bring to it? So talk to me again, so we've got, and I know you have a bit of a, and I want you to talk through it a little bit more, the AI-powered platform or technology that's really bringing, just in its simplest terms, buyers and sellers of private credit or offers together.
Right.
So tell us how it works.
So credit, as we know, existed from Medici's times. It hasn't changed much.
Yeah.
So you can imagine private credit is same as public credit, which is multiple times larger than equity market in the whole. The US alone trades about $5 trillion worth of credit every year.
That's the 5 trillion number. Got it. Okay.
And on top of that, if you combine Europe and Canada and Australia, you're talking about like $8 to $9 trillion, right? Multiple times of India's GDP, which is where I'm originally from. And all this happens via PDFs, emails. It's a zero trust environment. You start every transaction de novo.
And what you're talking about literally is, how do you analyze someone who's offering the credit or wants to borrow the money or at least get some capital in the first place?
We work on both sides. We work on both sides.
Okay.
Credit essentially means if you want a credit investor, you have a strong stomach for reading thousands of pages of documents, thousands of pages of legalese.
Right.
That's where the AI comes in.
Yeah.
We have, over the last 4 years, built a state-of-art deterministic, hallucination-free AI system that enables deal teams of very large asset managers. Now we're talking about 100 billion, 200 billion, right?
Right.
So we provide tools for them which asserts this number of sheets and it extracts data from it. It gets them to the decisioning point from which takes multiple days to a few hours.
So, and talk to me a little bit about how you decided to get there with, obviously, you have a co-founder, another partner. You guys have some street cred. I know that you've worked obviously in the industry for quite some time, but even someone who I know in the private credit space was like, look, technology, it's not going to change much. When we're doing our analysis, we're really, we literally have to go through those contracts and those agreements. And so we don't see machines taking over.
Yeah,
No.
I see something quite different. But let's also take with due credit to your colleague or your friend.
Yeah.
It is possible to take a bespoke, hand-rolled approach to credit if you are about 100 million, 200 million, 300 million range.
Fair.
But when you hit 2-3 billion, then you have all this capital that you are under enormous pressure to deploy.
Right.
But you cannot dilute your underwriting requirements.
No.
So at which point you are looking at the mechanization of this, which is where we come in.
Got it. Okay. And so far, and again, we're not naming names, but you've had some interest. You've had some very large backers. There's obviously large players in this space. We kind of know who they are, but so far these people are interested and certainly, willing to participate in
Absolutely. They are.
See what you guys do.
They
Yeah.
are jumping both feet in.
Right.
They understand the need for something like this. If they were going to hit the scale that is necessary,
Yeah.
unlike equities, which is a AUM plus a carry play,
Yeah.
credit is all AUM. The more AUM you manage, the more money you make. The more AUM you manage is a function of how much you deploy, how much you're able to underwrite, how much you're able to deploy in quality assets. Every bit of that has an AI impact in the solutions that we provide. Enables them to go faster.
You know, we talked a little bit earlier before you came on camera, and you were mentioning that it took you guys a couple of years to kind of really get the model to learn and understand what it is that it's going to be looking at, analyzing, comparing, contrasting. Talk to us a little bit about that process.
So for the first 2-3 years of our company's life, that's all we did. We put our heads down. We trained our models. Over $5 trillion worth of data. It's 1 year's whole American debt transaction, which is what we have set ourselves. I don't know if anybody is geeky enough to count this, but if they did, we are probably by far the largest knowledge graph that exists in corporate credit.
I'm geeky enough, I'll give you that. Yeah.
So this allows us to two things. It allows us to kind of anticipate every curveball of a document that comes from our customers. We probably have seen a version of it. This also allows us to not train on our customers' data because we don't need to train on our customers. CredCore recently, amongst with a handful of companies, got the ISO 42001 AI standard for safe and responsible use. This is the European Union mandate on companies that build models.
Wow. So
we recently got that, just a handful of companies in the world got this. We're one of them.
Wow, good for you guys. Okay. That's awesome. So now that's kind of where you're going to be focusing your attention and building out more going forward, I assume.
Absolutely.
Yeah.
So we are expanding. Credit is a very vast labyrinthine asset class. There are 1,000 nuances, 1,000 quirks. So we are rapidly training our models to understand all the end pieces, so which expands our TAM as well. So that's what we are focused on. That's what we're building.
That's amazing. A question, I don't know if you can answer this, and if you can, it's okay.
Sure.
Is there when people hear about certain issuers in the private credit space, the big ones like AXI or, SpaceX, all these sort of private companies that are issuing shares. Can you walk us through how your platform might help somebody analyze a company at that stage?
Absolutely. So we do work with some of the big names you just spoke about.
All right.
And
there's way more I'm totally forgetting right now, but
credit, remember, credit is an intrinsically social transaction.
Yeah.
Unlike equities, where I can sit in a small room and I can click a button, credit requires people to come together. It's a constant negotiation, multiple months project. Right? Having said that, an issuer that borrows their competence lies in running a world-class CFO organization, which doesn't always extend to understanding the deal documents. So we come in at that point, we help the CFO or a treasurer of a large firm understand the covenants they signed up for, putting a control system on top of it, helping them understand well ahead of time when they are breaching. So there are 2 large breaches that happened recently, right? Tricolor and First Brand.
Yes.
Right? So if CredCore were in play, wishfully thinking, we could have alerted the investors well ahead of time, seeing something like this could come out. We could have helped the CFOs of these companies know well ahead of time which covenants were being breached.
Wow, that's amazing. And with all respect, a lot of people might say, well, yeah, in hindsight, we could have, or it could have, or should have. But how do you quantify that exactly? What would have been different, or what would they have had access to that would have prevented them, or at least given them more of the red flags to hear?
Yeah, so spot on. So one is needing to understand what covenants you signed up for.
Yeah.
Every credit agreement is a 400-page, very complex monopoly rule book. Every paragraph has a handcuff. Every paragraph has an associated handcuff to another paragraph. Sometimes the linkages, the causation is not that easy. So having a company like us, which is not just a pure play AI team, we have bankers on our payroll that make sure every piece of our AI behaves properly. The joke within CredCore is we hire managing directors from banks and we make them QA engineers. Right? So that comes with an obligation, that comes with a responsibility, that comes with representing the craft at the highest end. Our models represent all these complexities, so allows us to do it.
Okay, which actually has taken me into a sort of a different direction that I want to talk to you about, which is, this is not your first rodeo. There are certainly people and there's connections and expectations out there. So tell us like a little bit about how all of this came together and how it's growing for you, and differentiating you guys.
Yeah. So let me address the growth part first. I told you credit is a social thing.
Yes.
It has its benefits for a startup. And when you're looking for customer acquisition costs that are very low, and mainly because it's a social contract, oftentimes we end up seeing our customers refer us to the other nodes of the network.
Okay.
So far we have grown very, very well. Sometimes, very fortunately so, we have ended up working with clients that are enormous, right? And we're a small company, and we take this responsibility very seriously.
And you have like these, you have a global reach. Obviously, they're sort of border agnostic. And at the same time, they're different individuals who you're bringing into. I'm assuming they're part of your broader network. They're relying on your experience, your expertise. You just dropped my phone.
So credibility goes a long way in this space, right? Which is the main thing that has worked in our favor when our customers, our prospects interact with us,
right,
as opposed to a general purpose AI company. They can immediately tell that we have been in the trenches, we have done complex deals ourselves, we have burned the midnight oil. So there's a lot of communion on the other side that we
I can appreciate that. And I know it's only day one here at Money 2020, but I got to admit, like there might be a little bit of a bias in terms of you maybe being more tech and less kind of credit capital markets focused. Have you experienced that yet?
We experienced that initially. So for example, when our prospects come into play, they oftentimes find us after they have tried the general purpose AI tools, the GenAI tools particularly.
Yes.
Right? So the promise of them is throw a credit agreement and you can ask all questions. It just doesn't work. Credit is a part, it's not very different than radiology. You are either 100% accurate or you're 0% accurate. Right? And so then they realize that 90% accuracy systems just doesn't cut it. You cannot make a business decision on it. So that's when they find us. That's when they start working with us. They see the amount of effort it takes to build a hallucination-free deterministic AI system.
For sure, and the understanding that, you need something that's obviously not just customized, but actually has the proper perspective and understanding of the marketplace, such as you and your partner. Wow.
You have to make this your main focus. You have to make this the hill you're willing to die on. It's not something you can do by the by. It's not a general purpose system. You need to know, you need to build an organization that knows, you need to set a model discipline around this.
Last question. So it sounds like everybody should be using this, right? You should be using CredCore.
I hope so.
Well, of course, but it also sounds like you're probably going to be ripe in the near future to have someone come out and want to buy it and put it into their system. What's your response there?
So we have had a few of those conversations.
Okay. I'm totally guessing, by the way.
I think the best days of CredCore are ahead of us.
Okay.
And as an entrepreneur, you always want to, every entrepreneur lives with a big dollop of delusion to some extent. It's a game of optimism, right? So we think the best days are ahead of us. We are seeing that in the amount of AUM that flows on our pipes. So we want to build this to the next large platform across where it happens. So,
and whatever direction that takes you in, you shall see, I think is probably your answer to a former journalist you're speaking to right now. I understand.
And all the best for your venture as well. And
I honestly appreciate your time. I'm glad that we got a chance to connect here at Money 2020. Thank you. And now for the legalese. The information provided in this podcast is for educational and informational purposes only and does not constitute financial investment or legal advice. Always do your own research and consult with a licensed financial advisor before making any investment decisions. Past performance is not indicative of future results, and all investments carry risk. The views expressed are those of the hosts and the guests and do not necessarily reflect those of any affiliated organizations.